Hi there, traders. This is Brad Gilbert with today's trading action. All right, now there's a few sort of kooky things happening in the markets, but let me just explain. Now, with these trends, I've had a few traders ask me about the trends here, and it just doesn't go up in a straight line. And you know what? Because all the central banks have done a lot of management already, there's no sort of sharp shifts in interest rate outlook. So that's why we're not seeing a dramatic move yet. Now, the Fed, the chance of a interest rate cut on December 10 is increasing for the dollar. But what we're seeing is the market's sort of piling into a weak dollar situation and then getting squeezed out like dollar Swiss is, right? So we are getting the trends. Like if you look at the Aussie and even the Kiwi for that matter, and dollar CAD, right? You get this nice trending market, but it's not accelerated with all these explosive moves we've seen over the last 6 months, right? Because when Trump says something crazy, it hasn't been factored into the market. It's a geopolitical event. We've got natural economics in place, so the trends are in play, but they're a bit gentler than probably what you're used to. Now, there's something just a little bit out of whack for my liking, and let me just sort of run you through that. Now, if you're looking at the interest rate tracker, right, we're at 83% for a chance of a 25 basis point cut on December 10 from the Fed, right? You're like, okay, well, that's a good reason for the dollar to be going down. What we're seeing on the US bond yields is they're up just a fraction, right? That means dollar positive, dollar strength, okay? And that's slowing the overall trending markets, right? Because if you look at euro, you might be thinking, and I know the ISM or non-services or non-manufacturing numbers were a little bit better, as was the industrial production numbers. But what we're seeing is we're seeing a nice, really nice flow to this trend, right? And I think this is time for a change in tact, right? And what I mean by that is I was sort of looking at this yesterday going, wow, this is such a nice setup. And if I just come back to my chart here, I was just looking at, I got into euro here, right on this signal. Okay. And I had a look later in the day and 2 or 3 hours later, and it was up around 75, up around here somewhere. And I thought, you know what? I'm just going to let this sort of give it a chance to go. So I raised the stop loss just below the entry level. Now, like it's easy in hindsight to work out what's going on here. Whether I should have taken profit, obviously now it's lower. You wish you had done that, right? But you want to give it a chance to go. But this is what we're seeing. That little nuance, right? With the if you're looking at the well, that's my server. Let me just get out of that one. If you're looking at the markets and you see the bond yields a little bit higher, right? So that means a little bit of a stronger dollar. That actually would suggest the euro tops out. Then, but there's a little bit of a mismatch with the prospects for a cut from the Fed, right? So there's a little bit of uncertainty there, and that's really slowing things down. So I had a good look at this and I thought, well, hang on a second, there's a better way to actually be looking at this. So what I'm suggesting now, and I'll be doing with these gentle trending markets, is definitely going into a trade setup, but both buy and sell, right? This is a good opportunity, not just to be playing at one side. What I like to do is get into the trade first, as in get into the trend. So euro is going up. So I want to be buying first. If I buy, then I'm on the right sort of side of the spectrum. Okay. So I'm getting long, and you can actually sort of get into the trade. And what that would have done for us, even using the pivot points, right? It can close out the position for you. So you know what it does is it gets us into the trade at a good level, takes profit when it looks like the market is completely stalling. And then, you know what, we're ready again to get into the trade again. So you're going to have a lot more, not necessarily shorter term trades, but you might be locking in 30 points, 40 points, 50 points, 20 points, right? But what we're doing is we're adding cash to the account using that trend in the market, right? This is like, you just got to like get a bit savvy with what is going on, right? So if we could see like euro, it's still in a gorgeous trend here, right? And I still like the look of it. But what we've got to do is get a little bit smarter, try and pick the eyes out of it, get into the trade and sort of trade the range. That's what we're sort of really looking at with a bias. We're trading the range with a buying bias because it's going up, right? I don't like to get short. If an instrument's going up, I don't like the first trade to be getting short. I want to be getting long first, okay? And then selling on a rally, right? That's what we can do with Primetime Pro. That's what I'm going to be doing for the, I think right through December, we're going to have good trending markets, right? The market is very comfortable with what the Fed are looking at, right? And you come through the rest of the central banks, a lot of these rates or a lot of their interest rate moves are locked in, right? 94%, 98%, 94%. That takes a lot of uncertainty out of the markets. That is good for us, right? Because you get the Fed cutting, then we're going to have nice, easy trending markets. And I think the best way to take advantage, Primetime Pro, buy and sell, right? Or if the instrument is dollar Swiss, sell and buy, or buy and sell. But the first trade you want to be looking for, set it up to get short first. All right. So keep an eye on the signals. I just did notice actually sterling Kiwi bullish, and we've got a buy zone on both instruments. This is where you just go to work. I see something like that, right? I'll go load a new page. I'll come straight into sterling Kiwi. I'll just explore, see what the setup is. Just let that load. Okay, it's spot on, right? So, and sterling Kiwi's come off a fair bit, right? So if we've got a buy signal on both short term and long term, that's good enough reason for me to be getting into the actual trade itself, right? The only other thing you would check is to come back to your calendar, and I'll just quickly go back to trading economics. We're looking at sterling and Kiwi, Halifax price index. Yep, we can check that out. Well, there's not much else coming out there. Some Eurozone data, not always, doesn't really move the market aggressively. And later on, don't forget, we've got Canadian employment numbers, and then you've got a bunch of US numbers, PC price index, Michigan consumer sentiment numbers. These are all sort of really good second tier numbers. So keep an eye on the dollar after these numbers. Once again, if these numbers are weak, it's going to go to a 95% that the Fed cuts by 25 basis points. If they're all strong, we might see that unwind a little bit. So to me, sterling Kiwi looks like a good trade to be getting into. All right, guys, that's a bit of a wrap from me. Enjoy your day. Cheerio.